If you're receiving Social Security right now, I need you to stop whatever you're doing and pay close attention to the next few minutes. Because right now, in June 2026, two things are happening at the same time that are going to affect the actual dollar amount landing in your bank account. And most people receiving benefits have no idea both of these things are connected, or that one of them could quietly erase money they thought they already earned. And most people receiving benefits have no idea both of these things are connected, or that one of them could quietly erase money they thought they already earned, that are already affecting checks, and that most beneficiaries haven't had clearly explained to them in plain language. By the time this video is over, you're going to understand exactly what's happening, what it means for your specific situation, and what you can actually do about it. Some of you watching right now may have already lost money without realizing it. Others are going to find out today that they qualify for a protection most people never know exists. Let's get into it. The first thing you need to understand is that your Social Security check in 2026 is not what most people think it is. When the Social Security Administration announced the 2.8% cost of living adjustment for this year, a lot of people celebrated, and that celebration was understandable. A 2.8% COLA is actually slightly higher than last year's 2.5% increase. The SSA said the average retired worker would see their monthly benefit go from $2,015 to about $2,071, roughly $56 more per month. That sounds good. $56 adds up. Over the course of a full year, that's nearly $672 in additional income. But here's where things get important, and this is where a lot of people miss the full story. At the exact same time the SSA was adding that 2.8% to your gross benefit, Medicare Part B premiums were going up at a rate nearly 4 times faster. The standard Medicare Part B premium jumped to $202.90 a month in 2026. That's an increase of $17.90 from 2025. So out of that $56 monthly gain, $17.90 went right back out the door to cover the higher Medicare premium before you ever saw a dime of it. That means the average Social Security recipient isn't actually seeing $56 more per month. After the Medicare deduction, the real net increase for most retirees is closer to $38 a month. And that's before any Part D prescription drug premiums, before any IRMA surcharges, and before federal tax withholding, if that applies to you. On an annual basis, instead of getting nearly $672 more this year, the real number is closer to $456. That's still money, but it's a significant difference from what the headline number suggested. And if you've been wondering why your check didn't feel quite as big as you expected it to, now you know why. Most people don't realize this disconnect exists because the COLA announcement and the Medicare premium announcement come from two completely different federal agencies. The Social Security Administration announces the COLA. The Centers for Medicare and Medicaid Services announces the Medicare premium. They don't issue one combined statement that shows you the net impact. You have to put those two numbers together yourself, and most people never do. Now, here's where things become critically important for a specific group of you watching right now. Because for some Social Security recipients, the Medicare situation isn't just cutting into their raise. It's actually wiping out their raise entirely. And in some cases, their net check is smaller now than it was last year. This happens because of something called IRMA. If you haven't heard that word before, you need to write it down. IRMA stands for Income-Related Monthly Adjustment Amount. It's essentially an income-based surcharge on Medicare Part B and Part D premiums, and it gets added to your Medicare costs, which means it gets subtracted directly from your Social Security check. Here's how it works. The Social Security Administration uses your tax return from 2 years ago to determine whether you owe IRMA surcharges this year. So in 2026, they're looking at your 2024 tax return. If your modified adjusted gross income, what the IRS calls MAGI, was above $109,000 for a single person or above $218,000 for a married couple filing jointly, you are subject to IRMA. And the penalty is not small. Depending on your income bracket, IRMA can add anywhere from around $74 to over $443 per month on top of your standard Part B premium. That's per person. So for a married couple, you could be looking at IRMA surcharges that are well over $800 a month combined, all of which comes out of your Social Security checks automatically. Pay close attention to this, because this is exactly where costly mistakes happen.
Let's say something happened in your financial life in 2024. Maybe you did a Roth IRA conversion. Maybe you sold a piece of property. Maybe you took a large required minimum distribution from your retirement account. Maybe you had a one-time capital gain. Any one of those events could have pushed your 2024 MAGI above that $109,000 threshold, and you might not have even thought about what that would do to your 2026 Medicare costs. Here's a real-world example that's being reported right now. A retired worker with a $4,200 monthly Social Security benefit received a 2.8% COLA this year. That 2.8% should have added about $117 more per month to their check. But they had done a Roth conversion in 2024 that pushed their MAGI to roughly $140,000. That triggered an IRMA surcharge of about $240 per month. So the math looks like this. Gain $117 from COLA, lose $240 to IRMA. The net result is their check is about $123 smaller every month than it was before the raise. Instead of getting more money this year, they're actually getting less. And here's what makes this especially painful. The SSA used a tax return from 2 years ago that reflected a one-time income event, not their regular retirement income. That single decision, made without thinking about future Medicare implications, is now costing them hundreds of dollars every month. If that situation sounds familiar, there's an important detail many viewers overlook. You don't have to just accept it. The SSA has a process called a life-changing event appeal. If your income has dropped significantly since that 2024 tax return, because you retired, because a spouse passed away, because that one-time income event was truly a one-time occurrence, you can file a request with Social Security to have your IRMA surcharges recalculated using more recent income information. This is done using Form SSA 44, and if you qualify, the SSA can remove or reduce those surcharges going forward. This is not a loophole. This is an official, legitimate process that exists specifically for situations where a one-time income event made your taxes look higher than your actual ongoing retirement income. But here's the problem. Most people don't know it exists, and the SSA is not going to call you up and suggest you file for it. You have to know to ask. If you or someone you love is in this situation right now, receiving Social Security, on Medicare, and wondering why their check seems smaller than expected, I want you to go to ssa.gov or call the Social Security Administration at 1-800-772-1213 and ask specifically about filing a life-changing event request related to IRMA. It could mean getting a meaningful amount of money restored to your monthly check. Now, let's talk about the second major change that's directly relevant to June 2026 specifically. And this one matters if you're still working while collecting Social Security, or if you know someone who is. There's a rule that not nearly enough people understand, and it has cost working Social Security recipients thousands of dollars in withheld benefits. It's called the Retirement Earnings Test, and it works like this. If you are collecting Social Security benefits and you are younger than your full retirement age, and for most people born in 1960 or later, full retirement age is now 67, the SSA will reduce your benefits if you earn too much from work. The 2026 earnings limit for people who will be under full retirement age for the entire year is $24,480. That's $2040 per month. Here's what matters. For every $2 you earn above that limit, the SSA withholds $1 in benefits. Let me put that in real dollar terms. Say you're collecting Social Security and you're working part-time, earning $40,000 a year. That's $15,520 above the earnings limit. The SSA will withhold half of that, roughly $7,760 in benefits over the course of the year. That's nearly $647 a month withheld from your check. Now, there's a separate and slightly more generous rule for people who reach their full retirement age during the calendar year. If you're turning 67 this year, the limit is much higher, $65,160, and the withholding rate is only $1 for every $3 above that limit, not every $2.
So the window right before you hit full retirement age is actually quite different from earlier years, and knowing which rule applies to you is really important.
But here's what most people don't realize, and this part is actually good news that a lot of working beneficiaries overlook. When the SSA withholds benefits because of the earnings test, those benefits are not simply gone. They are not taken away from you permanently. Once you reach your full retirement age, the SSA recalculates your benefit to give you credit for the months when benefits were withheld. Your monthly payment going forward is permanently increased to account for what was temporarily held back. This is a rule the government doesn't exactly advertise loudly. If you lost money to the earnings test in previous years, you may already be entitled to a higher monthly benefit than you're currently receiving. And if you reached full retirement age recently and had benefits withheld in prior years, it's worth confirming with the SSA that your benefit was properly recalculated. This matters even more now in June 2026 because the higher earnings limits that took effect this year means some people who would have been penalized last year for working a certain number of hours may no longer be penalized at all. If you pulled back on work hours specifically because you were worried about crossing the old 2025 limit of $23,400, that limit is now $24,480. The difference is $1,080 a year. On a part-time schedule, that could mean the freedom to work a few more hours each month without losing a dollar of your Social Security. And for people who are approaching full retirement age and deciding whether to keep working, understanding that any withholding now gets paid back to you later can completely change how you think about that decision. There's another detail many viewers overlook when it comes to both of these changes, and it connects directly to the payment schedule in June specifically. For SSI recipients, people receiving supplemental security income, your June 2026 payment arrived on June 1st, the first of the month. That's standard. But what's important to understand right now is that June is not a double payment month for SSI. If you saw something online suggesting SSI recipients would get 2 payments in June, that's not accurate. The double payment months for 2026 are July, October, and December because of how the calendar falls on those months. Those months are coming, and when they arrive, I'll have updated information for you. But here's why this matters in June specifically. If you were expecting a second SSI payment this month and it didn't come, that's normal and correct, not an error. On the other hand, if your regular payment didn't arrive on its expected date, that's something worth investigating. You can check your payment status anytime through your My Social Security account at ssa.gov or by calling the SSA directly. For standard Social Security retirement and disability recipients, the June 2026 payment schedule runs on the birth date system. If your birthday falls between the 1st and 10th of any month, your June payment came on Wednesday, June 10. If your birthday falls between the 11th and 20th, your payment came on Wednesday, June 18. And if your birthday falls between the 21st and 31st, your payment comes on Wednesday, June 25. People who started receiving benefits before May 1997, or who receive both SSI and Social Security, get paid on the 3rd of the month, which was June 3rd this month. No disruptions, no holidays affecting June. The schedule is running exactly as expected. So let's bring all of this together, because I want you to walk away from this video with a clear picture. There are 2 things happening right now in June 2026 that matter to Social Security recipients. First, the 2.8% COLA you receive this year is real, but after Medicare Part B premium increases, the actual net gain in your pocket is significantly smaller than the headline number. For most people, we're talking about closer to $38 a month in real take-home increase, not $56. And for people subject to IRMAA surcharges, some are actually receiving less money than they were before the raise. If a major one-time income event in 2024, a Roth conversion, a property sale, a large RMD, pushed your income above $109,000 as a single person or $218,000 as a married couple, your 2026 Medicare surcharges may not reflect your actual ongoing retirement income. You have the right to appeal that using the life-changing event process through the SSA. Don't leave that money on the table. Second, the earnings limits for working beneficiaries increased in 2026. The new limit is $24,480 for those under full retirement age for the full year, and $65,160 for those reaching full retirement age this year. If you've been limiting your work hours out of fear of benefit reductions, check whether those new limits change your situation. And if you've had benefits withheld in prior years because of the earnings test, confirm with SSA that your benefit was properly recalculated when you reached full retirement age. These aren't small details.
They translate directly into real money, hundreds of dollars a month for some people, that you either are or aren't receiving right now. And here's the honest truth. The Social Security system has hundreds of rules, and it's not set up to walk you through all of them proactively. The SSA sends you a check and a notice. It doesn't always explain what you might be missing, what you could appeal, or what adjustments you might qualify for. That responsibility falls on you, which is exactly why staying informed on this channel matters so much right now. If this video helped you understand something about your benefits that you didn't fully know before, I want to ask you to do one thing. Hit that subscribe button right now. Because the changes to Social Security, Medicare, SSI, and retirement benefits don't stop coming. There are ongoing legislative proposals, mid-year adjustments, IRMA threshold updates, new SSA policies, and payment changes that are going to keep affecting what lands in your bank account. The people who stay ahead of those changes are the ones who protect their benefits, catch errors before they become costly, and take advantage of every opportunity they're entitled to. The people who don't stay informed are the ones who find out 6 months later that they should have appealed something, or filed something, or known about something, and the window is already closed. This channel exists to make sure you're in the first group, not the second. So subscribe, turn on notifications, and share this video with someone you know who receives Social Security. There's a good chance someone in your life needs to hear exactly what we covered today. I'll see you in the next one.